Hello again on Smart Money. Here we are on a rather windy day at Nariman Point. I was just speaking to Karthik Jhaveri. With interest rates going down, how is the scenario changing for investors like you and me? Karthik, you have ideas?
Basically what happens as soon as the interest rate falls, obviously an investor is looking for a better rate of return on his money.
Right.
To put an example to that, if I'm earning 8% and if the rate of interest is going to go down, which means say I'm going to now earn 6 or 7%,
yes,
I want more return for my money.
Right.
And which is why I'm going to look for another avenue which is going to give me better rate of return. That's what it means.
All right. So then, in terms of investments, then where should I be looking now? Equity markets are one place where many of our investors put in a lot of money. You have been saying on a lot of our episodes that you need to have exposure to equity.
Absolutely.
And now is the time to start, if at all you haven't yet.
Correct.
As far as the stock markets are concerned, with interest rates going down, how do you see that getting affected?
See, obviously, as soon as money becomes cheaper, all corporations, all institutions, everyone has borrowed some money, right? So if the cost of borrowing money or the cost of debt, as soon as that goes down, automatically profitability improves, everything else remaining the same. Sales remain same, cost of manufacturing remaining the same. If everything is going to remain the same, just that your money is now cheaper, obviously you make more profit, and more profit means better pricing of the shares and better valuation. So does you make money on equities. If the rate goes down from 9% to say my average rate is now 7.5 or 8%, it will take some time for my balance sheet to reflect that profitability. And that's the time analysts will pick it up, and that's the time the investor interest will heighten in my company's stock.
Sure.
And that's the time the stock market will. So there is a lag effect. There will be a 6-month to a 9-month lag effect.
In fact, we have a viewer, Udayan is his name. Now, he's got a certain question because he's made certain investments already. As far as the markets are concerned, he's put money in mutual funds and equities and beyond. Let's just find out what he has to ask us.
Meet Udayan, 33, a long-standing soldier of the private sector, a recent entrant into matrimonial bliss and with a small set of loans to pay off. 4 to 5 lakh on the home he purchased, 2 lakhs on a car loan, 1 lakh in equities and 30,000 in debt funds. And now, with interest rates sliding down and not looking to go upwards anytime soon, is it going to do any wonders for Udayan, who's already made his investment choices?
Right, so what does someone like Udayan do now that he's made certain investments already?
That's right.
What exactly can he do now that interest rates are falling?
A little bit of restructuring there to get into large caps, the blue chips which will move up faster.
Right.
So move into those kind of stocks. Mutual fund obviously continue to hold. That when the rates are dropping, the effect will take some time to come.
Sure.
Invest in those assets which are going to benefit as a result of interest rate coming down. Don't be in a hurry to prepay your home loan. So go easy on the home loans. Don't be in a hurry to pay them off because your house is an appreciating asset.
Right.
It's going to make money for you. Worst case scenario, it will still grow in line with inflation.
Right.
So invest your money elsewhere. Wait for some time. Wait for 2 years, 3 years. You will get large profits. And that time when the rates start moving up, that's the ideal time to make a prepayment.
Also, because we are nearing the 31st of March and talking about lock-in periods as well,
Right.
now there is ELSS and other kind of investments
That's right.
as well. How do you
Yes.
rate them where the interest rates are going down?
See, obviously a fund like an ELSS fund or any other equity fund is going to directly translate into profitability for the company.
Right.
So if you are going to make your tax savings, then better go to an ELSS because then there's a probability that in 3 years you will make a substantially handsome return is very, very high. And the cycle will turn around in the next two to 3 years and you will have a lot of profits to make. But you see, you got to wait for some time because right now the banks are not immediately reducing the loan.
This is what I've heard now. Of course, interest rates are going down, but banks are not very happy to give out those loans until they're very sure about the creditworthiness of the people they're lending it out to.
One, they don't want to be saddled with more NPAs, and because there's a general downtrend everywhere, everybody is locked in with more inventories, stocks are piling up, sales are not happening. At this time, the banks are a little apprehensive about lending unless it's an extremely good case where they would lend and they would make returns. But as soon as you drop the rates, obviously demand will go up for the loans. So they're holding on to that. So, we'll have to bear with that till about, I'm guessing, April or May.
Now at this kind of time, would you actually buy into it with interest rates going down?
In real estate, the prices have crashed about 30 to 40%, but not many would be willing to accept it.
Sure.
So even if there is a cheaper loan available, there are not enough buyers, or if there are buyers, they are not willing to make that decision right now. They're thinking it will fall even further. About 6 months is more the time period that we're looking at, and within which the rates should stabilize. They should come down even further, maybe 20-30% more. But start giving your offers. It's a buyer's market now.
Right.
What you need to do, if you're really buying a real estate, make an offer.
Right.
You might be lucky, you might strike a deal.
Sure.
If you're not going to strike a deal now, you'll strike a deal 3 months later on.
Right.
But start investigating. You might get a deal now, you might get a deal even 6 months down the line.
Correct. Yes.
Keep it ready. Get your sanction letter in order. okay, and go on to a floating rate, because the rates are going to go down. So obviously you don't want to be in a fixed loan scenario. You want to be in a floating rate scenario. So you have your money ready. As soon as you get your deal, make your move.
All right. Sounds like fair advice. Karthik, thanks very much for joining us.
Pleasure always.
Sharing all those ideas. With interest rates going down, there is a world of opportunity that is coming up, and stock market likely to go up as well, going ahead as
Absolutely.
Karthik is suggesting. Now, of course, we are talking about the equity